Welcome to the B.F. Anderson Technical Report for January the 14th. I thought it would be interesting to go back and look at a study done by LPL Research, Ryan Dietrich, where he went back to 1950 and looked at every single time that the Democrats controlled the White House and the Congress. What's interesting here is, and we all know the circumstances around John Kennedy, the assassination and so forth, that could have been a major factor there, probably was. Lyndon Johnson, Jimmy Carter. So there were three negative periods where they controlled the White House and the Congress. The average gain was 13.2% for that year, and 83.3% of the years were positive. This time might be different, is what I always hear. Things are certainly different, but I just thought it would be interesting to look back on history and just kind of see what has happened in the past. Now, one thing also Ryan Dietrich put out was a report that said basically this. In 2021, and as we get into the report today, what we're going to do is a review of last year just to kind of give you a feel of what happened and what we can learn from it. Anyway, 2020, we're saying goodbye, and it'll go down in history as the first year ever to be down 30% at one point and still finish the year in the green. He said, we've had some wild years for investors, but never one that was quite the roller coaster of 2020. Now, here's a kind of a graphic illustration of what he's talking about. And remember here, this is not the total return for the year. The report was done back in July, so there were 5 months left in the year. And I've got my assistant here, Amy. What was the total for the year, the gain for the S&P?
It ended up being up 18.5%, and I'm also a money manager.
Okay. Well, anyway, my point is, or his point, Dietrich's point is, you got these really big drawdowns, and then look at the bounce back by the end of the year. Well, this is basically was the biggest drawdown in history with a rebound, just to be known. Winston Churchill, I like to read his quotes, and he says, those who fail to learn from history are doomed to repeat it. I think there's a lot of truth to that. So let's do this. Let's go back and look at last year and just see what we can learn. Now, remember, it was a crazy year, and the drop between February 19th and March 23rd was 33.92%. So as you can see here, our indicators, which are trend following indicators, and this is where trend following really becomes important, because as you can see here, once you broke below those moving averages, you got a sell signal, and you should be being very defensive. Now, we started the year in very positive terms, but by February we started going to cash. So trend following is where you use moving averages to help you make these decisions. However, history shows it could have been a lot worse. So let's look at some past periods. All right, this is the year 2000, the drop in 2001. That drop was 50.51%. $1 million would have dropped to $494 down here, from the top. Let's look at 2008, 2009. You can see here the drop was 57.69%. $1 million dropped to $423,000. And then just to find an extreme example, just to make our point, in 1929, the market lost 89.19% of its value. So $1 million dropped to $108,141. So the point of trend following is just to ask the question, can you handle something like this? Is it something you really want to go through? Or would you rather have a system where it would get you out before you have to go through a protracted bear market? But the good news is it'll get you back in as we go into a long-term bull market. So you'll never miss a bull market, and hopefully you'll be able to avoid the bear markets. So I wanted to show a couple of examples of stocks that we had in the portfolio at the time. Now, one of the terms that we like to use is called violation of a trend. So this is Tesla. And, we also pay attention to 5 indexes. But however, sometimes the individual stocks in your portfolio will give you more of a leading reading. So in other words, here is the 10-day moving average. You can see that the stock broke below the 10-day moving average, and then and there's your low for that day of the break, and then you get what you call a violation of trend, and you basically sell here. And you can see what happened. It just continued to come on down. Here's Roku, another example. Now, what's interesting about this example, it had you out of Roku in December. Even, we're talking almost 3 months before the decline. So you can see here with Roku, you got the break right here when it broke below that moving average, and then here you got the violation. You would have gotten out in this area and missed out on all this, which is, I think, the general idea. Now let's get into the business at hand. Let's look at where we are now in our trend following. Okay, NASDAQ continues in a strong uptrend. 25-day moving average is above it. The main rule here now is we want to not break below that lower moving average, but so far we're continuing to hold above the upper moving average. Now, on the weekly graph, which is where we have a 35-week moving average, you can see we continue to stay in a very healthy uptrend. This means we're still in a bull market. Now, on the New York Stock Exchange high-low index, you can see here that we're continuing to make net new highs. And in fact, we just hit a new high on the 10-day moving average for the net new highs. Now on new lows, again, we saw a little bit of a pickup in new lows yesterday. Nothing to be worried about as long as we stay below 40 a day. Now on the Golden Cross, which is a long-term graph, this is the 10-month versus the 20-month. Again, we want to be very consistent here. We go through these graphs every week because we're simply saying you've got to stay on top of this. You've got to know if you're getting a sell signal and take appropriate action. Or a buy signal and take appropriate action. But right now, the S&P 500 continues to look very positive in a golden cross. NASDAQ, same thing, making new highs, golden cross. Here we have China actually making new highs and a golden cross. Now, on the aggression index, you can see strong uptrend. On the actual indicator, it needs to stay above this line here, which it's easily doing. It's saying that investors are aggressive. Now, here we have the 3 economic indicators that we follow. As you can see here, interest rates have popped up. Oil is actually starting to really get into an uptrend here, and the financial stocks continue to stay strong, which would tell me that interest rates are probably going to continue to climb. Now, here we have the S&P 500 on a 25 and 50-day moving average, very constructive. We also have the 200-day moving average, very constructive. No problems there. On the put-call ratio, again, this is measuring sentiment, mainly institutional sentiment. Retail sentiment would be individuals. We are starting to see a little bit of froth here, actually on the retail side. Now, on the institutional side, the froth is definitely there and it's been there for quite a while. And again, I have to repeat, the sentiment index is a secondary indicator. It's something you should be aware of, but you don't make primary decisions off the sentiment index. Volatility index, the VIX, continues to stay constructive, no problem whatsoever. As long as we stay below 30, we're in good shape. All right, now here I just wanted to make a point about the bond market. This is the 20-year Treasury Bond Fund called the TLT. And what I did is I put a long-term graph on this thing of 10, 20 month. This is a monthly graph. 10-month moving average, 20-month moving average. Now what we're looking for is a death cross or a golden cross. And I can just tell you, and many times it's happened, is that people keep calling for a top in the bond market and interest rates going up. I really think if this indicator gives a death cross, that's going to pretty much confirm that's the case. But until that happens, continue to just be aware of it. Now we're going to get into the top 5. Amy, what do you think about Celsius? It's been good to us.
As far as a consumer product, it's great. Tastes good. I like it.
Aren't you drinking one now?
I'm drinking one right now because I'm having that 3 o'clock slump.
It's an energy drink, and they do make it with sucralose. Is it sucralose?
Yeah, sucralose.
Sucralose.
It's supposed to help with those struggling with diabetes or sugar intake restrictions.
And everything I read about sucralose, along with stevia, is considered the best artificial sweeteners. These drinks are really pretty good. I mean, they're like a Red Bull, but I think Red Bull tastes like cough syrup. Okay, here we have Freeport-McMoRan, which is copper. Again, we talked about, if we're going to see a tremendous build out of the electric car industry, they're going to need a lot of copper. Now, on grow generation, Amy, grow generation is the way I look at grow generation is that we're betting on a commodity here, we're speculating on a commodity, which is marijuana. And if you really think about grow generation for a minute, it's kind of like selling the picks and the shovels
Correct.
to the gold miners.
Ventilation, soil, lighting, everything you would need to properly produce marijuana, cannabis.
Well, and it's also, if you go to their webpage, you'll notice there's somewhat of an institutional flair to it, meaning that, they have 35 stores, right? It's
36, and I mean, this is something you might see on the shelves at Home Depot one day.
Okay, Kodiak Services. Amy, you're familiar with this company. What are they?
Kodiak is a biopharmaceutical company, and they're really just involved with retinal diseases and trying to create disruptive technologies that prevent blindness. So pretty big deal.
You can see here, the 10-day has been somewhat in back and forth, but we really like to see the 10-day getting to a strong uptrend like that. So hopefully that's getting ready to turn, and we'll see that. Here's Roku, which, by the way, looks pretty good on that 10-day moving average. Again, we're talking about mainly competition to Netflix, and we use Roku equipment here at our home. And Amy, you have Roku as well, I believe.
Yeah. I like the sound bar that they just came out with. Too.
Yeah, they have it's called a stream bar, and it's where you get a speaker and the actual streaming device all in one device, so you have one remote, which is really
very sleek.
Really, really nice. So that's it. If you have any questions, please give me a call. Thank you very much.